So, hello everyone, my name is Anjali Razore. Today, I am here to discuss with you about very thrilling topic, which is the role of a blockchain in trade finance and factoring. Here is the content, abstract, introduction, methodology, study, analysis, examples, conclusion, and then reference. So, the blockchain in a trade and finance. Blockchain of a distributed ledger. There are shipping company, imported bank, then customers, exporters, and exporters. We can see within a brief. So, abstract. The blockchain technology has the potential to revolutionize the trade finance and factoring by streamlining processes, increasing transparency, and reducing the fraud. So, in this presentation, we examine the current state of trade finance and factoring, and how the blockchain technology can improve these industries. We first provide an overview of a trade finance and factoring, highlights the challenges and inefficiencies in the current ecosystem. So, current system. Then, we explore the key features of blockchain technology and how they can address these challenges. Next, we review several blockchain based platforms that are currently being developed for trade finance and factoring, including trade and micropolo. These platforms are leveraging blockchain technology nowadays. So, also examine the potential impact of blockchain on a financial inclusion as well as the regulatory and legal challenges that must be addressed in order for blockchain to widely adopted in the trade finance and factoring. So here is the introduction. The trade finance and factoring are the crucial aspects of international trade, providing necessary funding and risk management service to the businesses involved in a global commerce. However, these industries have long suffered from challenges such as high cost, inefficiency, and a lack of trust and transparency among participants. The blockchain technology has emerged as a potential solution to these challenges, offering a decentralized and tamper-proof ledger of transaction that can increase the transparency and streamline processes and reduce the cost. In this presentation, we'll explore the potential role of a blockchain in the trade finance and factoring, examining its key features, exploring the current blockchain-based platforms, and discuss the regulatory and legal challenges that must be addressed in order for the blockchain to become widely adopted in these industries. So here is the blockchain transaction. A node writes a transaction request. The transaction is represented as a block. Block is a broadcast to all the nodes of network. Transaction is validated by the nodes. A new block is added to the existing blockchain as in a queue, and the transaction is completed. And text message is given to the pass to a node rising person, which follow the transaction request. Methodology. The methodology used for the presentation involve a review of existing literature and research on the topic of blockchain in the trade finance and factoring. Additionally, the several blockchain platforms that are currently being developed for the trade finance and factoring, which is including TradeIX, VTrade, and Macropolo, and analyzing their features and potential impacts on the industries. Also interview industry experts and professionals with experience in the trade finance and factoring as well as the blockchain technology to gather insights and perspectives on the potential role of a blockchain in these industries. Finally, we examine the regulatories and legal frameworks that impact the adoption of a blockchain in trade finance and factoring, including issues related to the data privacy, security and compliances, and anti-money laundering AML and know your customer KYC regulations. Now, here is the study of blockchain. There is a client, supplier, customers, and factor. First, invoice the blockchain. Then, client suppliers is delivered to the customers with the confirmation of receipts of good. Then, receiving delivery information to the factor and debited the money. And after that, the payment of a balance get detected. Balance. So, the blockchain process steps. Here are the 5 steps. First is a P2P network called as a peer-to-peer network. Then communication, validation, verification, and confirmation. So the someone is to peer-to-peer network request a transaction in the first step, then communication, The request transaction is a broadcast to the peer-to-peer network consisting of a computers known as the nodes. Validation. The network of a node validates the transaction and the user states using algorithm. A verified transaction can involve a cryptocurrency contracts, records, or other information. Verification. Once verified, the transaction is combined with other transaction to create a new block of a data for the ledger. Confirmation. The new block is then added to the existing block in a way that is permanent and unaltered. The transaction is completed. Analysis. The blockchain technology has the potential to revolutionize the trade finance and factoring by addressing many of the challenges faced by these industries. In analysis, we explore the key features of blockchain technology, how they can improve trade finance and factoring, review several blockchain-based platforms that are currently being developed for these industries, and examine the potential impact of blockchain and financial inclusions. Firstly, blockchain technology provides a decentralized, immutable, and transparent ledger of transactions that can increase transparency and reduce the risk of fraud in the trade finance and factoring. This can help to mitigate the high cost and inefficiency associated with the traditional trade finance and factoring systems such as Reliance and intermediaries, and this needs to manual document processing. Furthermore, the smart contracts, self-executing contracts with the term of the agreement between buyer and the seller being directly written into the lines of example. So the Ripple real-time blockchain helps banks and financial institutions instantly send money. The company payment platform RippleNet lets banks from across the world access a standardized network of institutions for spider and transparent transactions. The blockchain in the factoring niche, the international money transfer is in a 60%, securities clearing and a settlement is a 23%, KYCs and anti-money laundering is a 20%, flat currency payment and settlement is a 90%, creating transparency is a 90%, decentralized notoriety is a 60%, fraud deterrent is a 50%, assist resistance is a 12%, and security insurance and trade is a 11%. So the conclusion, in a conclusion, the blockchain technology has a significant potential to transform trade finance and factoring by increasing efficiency, reducing costs, and improving the transparency and trust among the participants. While there are regulatory and legal challenges that must be addressed, the development of robust and user-friendly blockchain-based platform can help to overcome these challenges and derive the adoption of blockchain technology in these industries. In the blockchain ecosystem, there is a buyer bank, supplier, and then supplier bank. With the physical supply chain DLT, registration DLTs, AML, and KYC, then payments DLTs and other DLTs. It is all about the distributed ledger, trade finance and distributed ledger. Here is the references you can follow. The most efficient preference is to the blockchain and the trade finance opportunities and challenges, Journal of International Trade and Economic Development. Thank you.